All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Hope everyone's having a nice morning this morning. It is 9 a.m. Eastern Standard Time here on the YouTube channel, the G.A.R Capital YouTube channel. Thank you so much for joining me again. Bottom right-hand corner of your screen, a little white logo. Click on that, turn on notifications, subscribe to our channel. Make sure to hit that like button if you like these videos. Appreciate it as always. Let's get to it. All right, so Dow futures are up 196. They were up a little higher earlier, pre-GDP number. We'll go over that here in a second. NASDAQ down 1.5%. S&P futures down 1.13%, 42.27. Russell down 1% this morning, up 1% this morning. S&P up 1.12. Sorry, I thought I said down. Crude oil down 1.18%, 101.89 a barrel. Gasoline futures down 0.46%, up 0.48%, 3.43 a barrel. Gold futures are down 0.14% at 1886. 23.14 for silver futures, down 1.5%. Dollar yen, 130.74, is up 233 pips. Wow. Look at that move. Yen getting smoked today, 130.74. I haven't seen a 130 level on dollar yen really since like 2014. I have to let my team know so they could see it. Anthony, who used to be a forex trader with me in the beginning, that's like 2014 vibes. I mean, if you're an OG Forex trader, like the 2010s, 2014, like I did, you haven't seen dollar yen at 130.74. I remember it used to hover around like 127, 128, maybe 125. And then it got as low as around 109. What a move for dollar yen. Bitcoin is up. Remember, I talked about that on Twitter. Bitcoin being up. Keep an eye on Bitcoin. Usually gives us a leading indicator to the NASDAQ. It is moving up with the NASDAQ. Pretty much in line, 1.5% for Bitcoin, 1.5% for NASDAQ, 39,495. Again, wait for that 40,000 level is what I'm watching for to see if this thing has legs, if we had a little more room to the upside. 29.11 for Ethereum futures up 1.87%. Again, let's see if we get above 3,000. So VIX is down 4.78% this morning. Dollar is up 0.82%. The dollar just continues to run. The dollar has to come down a bit, guys. Can't have it run this hot. Again, if not, you're gonna have second half really, really bad deflation. And again, bad inflation, rapid inflation is just as bad as rapid deflation. Not good. If anything, ask Japan about that. The lost decade of the 90s. 10-year yields are up 2.34%. Let's go to TNX, and you can see it looking to get that gap fill around 2.9. So I'd expect yields to tap 2.9 this morning to fill that gap. Let's take a look at VIX this morning as well. We do also have a gap on VIX. Possibly we may fill this at 31.41 and then continue back down. Really the level that I was looking for to break as soon as possible was 30. We are now exactly at 30. 28.38 is my next target. Looking at S&P futures, we broke above that level, 42.52, 42.53. We came back down because we had GDP numbers that came out. I'll go ahead and read it to you. Here's the GDP numbers. Price index, 8%. Versus 7.2%. That's the price index. The actual GDP number annualized. This is quarter over quarter versus last year's negative 1.4% versus a plus 1%. So again, this is an advanced GDP. There is revisions, but again, the GDP is negative 1.4%. Here's some news on the actual GDP number. Better perception of the 1.4% GDP decline. Final sales, which excludes 0.8 percentage points for inventory drag, negative 0.6%. Final sales to domestic purchasers, which also includes net trade drag of 3.2%, was actually up 2.6%. So here we go. Let's take a look at the GDP growth here. The GDP growth, you can see, really was the net trade. Now, the net trade, to me, may mean the dollar index being so strong that it is hurting overseas trade. That could be it. Remember, they have to price them in based on their dollars of what they made it for. If you go to Japan and being cheaper, if you go to Japan right now and you have dollars, you're going to have a great time traveling, or in Europe. But again, if you're a Japanese person or someone that holds yen and they need to buy something here in the States, they're pretty much screwed there in terms of that purchasing power. But you can see consumer spending is up, business investment is up. So again, not really terrible. You could see, but again, a miss. This is advanced. So again, we need to see the final GDP report. I believe it's next quarter. So remember, every time you have non-farm payroll report, every time you have CPI reports from the Commerce Department, which is Q1, there is revisions as well. If you're looking back to the S&P and you're trying to see, let's see here, in terms of GDP, kind of where we are and what was the last time that we had a fall. Here is the GDP, the past 10 years, right? And you can edit it here going by percentage over percentage, right? Percentage over percentage over a year ago. So you could see that the last time we actually had a drop in GDP was really Q2 to Q3. So it's not like we've never had a drop. So we actually had a drop annualized compared. So we just had one. And then we had the drop in the recession. We also had a drop from 2019 to 2020. Obviously, we had a drop from Q2 2018 to Q3 2018 to Q4 2018. So it's not like this is anything new. 2015 we had this. 2013 we had it. So again, the only thing that stands out is the fact that we still have inflation with a GDP that is contracting. Not a great sign, but again, there's some perspective there. And you're probably saying to yourself, Carlos, why are stocks going up still? Again, Facebook didn't have the best quarter. I talked about that yesterday. But again, it wasn't as bad as people were expecting. They were expecting a Netflix type bloodbath. A lot of people were short. They got hit, and you can see a short squeeze higher. So again, we should be able to get that push. We talked about that yesterday on the afternoon note. The last 3 days of the month, especially during a bad month of double-digit declines, or an actual big decline in the S&P. I think this month is right around 7% or 6%. I have to get that number exactly. But I did tweet about that. And again, the last 3 days are relatively strong for the S&P. And that's an average of 2.6%. The S&P yesterday only gained about a fractional amount. Now with futures going up. So, based on the futures today, we should be up about 1.17%. We're just halfway there to get home. So the target is right around 4,300 is what I have in my screen if we're going to continue higher. This would fit that same kind of script. When you have a tough month, same as January, tough month, last 3 days do get strong. So again, we'll keep an eye on it. Doesn't mean that we're not going to get more downside, but it gives us an opportunity to play some volatility to the upside when everyone is actually bearish. There was some earnings today as well. McDonald's was a big one. Let's go ahead and read that one and I'll answer some questions. MasterCard did report $2.76 versus $2.17. That's great because Visa had a great quarter and MasterCard should be going higher as well. They're up about $9 pre-market. Nice revenue, 5.14% billion versus 4.9% billion. Adjusted gross dollar volume up 17% year over year. Total adjusting operating expenses 13%. MasterCard, Visa, you want to hold those. They're great companies to have long term. Twitter, they reported earnings. Q1 90 cents versus 4 cent estimate. 1.2 billion versus 1.21 billion, so it's a miss. They're not going to provide any more outlook because they're going to go private with Elon Musk. They pretty much accepted that. Apple reportedly faces new antitrust charges in European Union, over Apple Pay blocking various financial groups. That's going to be reported. We're going to get a report from Apple, their earnings report after the bell, as well as Amazon. McDonald's report is $2.28 versus $2.18, 5.67 billion versus 5.55 billion. McDonald's is a great company. Again, but you're pretty much not owning for the growth, you're owning for the yield. They're up about $3 after a pre-market. Global same-store sales, 11.8% year-over-year growth. You can see it here. 8.7% estimate based on a 2-year basis. First, firm's fiscal year 22 operating margin to low to 40% range. So obviously, in terms of McDonald's, they have some kind of pricing power with their food items. But again, inflation does tend to creep in. The fact that McDonald's did have a great quarter shows that they've passed on those costs to the consumers. Next here we have Comcast, again a streamer as well, 86 cents versus 80 cents, 31 billion versus 30.5 billion. Adjusted EBITDA 9.15 billion, 8.8% year over year. Total customer relationships 34.4 million, up 2.7% year over year. Net adds 194,000 year over year. So Comcast doing nice. The good news is that that's in the same sector as Netflix. The weird thing, even after that great earnings, they're down. So again, I don't see any guidance that would show that. Caterpillar guides revenue higher quarter on quarter, citing strong user demand. You can see here, and pricing, earnings slides. guides Q2 and adjusting margin similar year to year. So Comcast is down pre-market. Netflix is up pre-market. Facebook, we know, is up pre-market. AMD reports next week. Those are semiconductors. But in terms of streaming kind of communication services, Twitter did report. They're going private anyways. Let's take a look at Google. Google's up $36 with Facebook being up. And then we looked at one more, which was Caterpillar, which I own shares of this, but they're down pre-market. Let's see if we can get below 200 on PAS. Actually, no, the level I have for more Caterpillar, because I do own, is right around 180, 80.27. That's your support on the daily. So a little bit of a move, but not much to do anything. And I haven't really done really much in terms of buying more stock lately. Again, I still think that 4,000 S&P line feels like a magnet. Feels like that seems to be that right price to earnings ratio. What could change that, honestly, would be, the Fed just raising rates right away as soon as possible. Maybe a 75 basis point hike. If the China lockdowns kind of subside, and if Russia and Ukraine come to some kind of peace deal. Until you get that, you have three-prong like enemies list of what things are happening to the economy. And of course, we have the GDP contraction, so that doesn't help things. I want to see the price action this morning. I want to see how Facebook reacts. I want to see how the VIX reacts. Seeing Microsoft having a good day is nice. We did play calls yesterday, but 42.53 is a key level. Key level on NASDAQ, guys, 13,000 on the future side. Keep an eye on that. All right. Good morning, guys. Carlos, do you think the GTR is a good investment? If you're talking about the car GTR, probably. That's up to you. But if you're talking about GRT graph, yeah, I still own it. That's a coin. It's a crypto. I still own it. It's been volatile lately. Up 20%, down 11. They're all the same, mostly to me, in terms of altcoins. I don't even look at it. What are the chances Netflix gets the boot from the S&P 500? That's a really good question. Wow. I think there is a market cap, I'm assuming, number that they want in their head. Yeah, the S&P has in terms of barometers. I don't know if they broke down below it. There's obviously been some precedent to that. It's happened many times. But not in terms of Netflix, but it's stocks. Stocks move all the time. So I wouldn't be surprised if they remove from the S&P. I don't think they'll be removed from the Qs. But S&P is a possibility, and that would hurt the stock, sure. I wouldn't want to buy anything here. Again, like I talked about, Apple and Amazon have the same exact freaking thing, and Google, and with Spotify. Netflix, okay, they create a lot of content. If anything, you're owning the stock for a possible turnaround plan that's going to take a long time, or you're investing in them because you think they're an acquisition target. Maybe you held Twitter for years, and that thing hasn't done much. And then old Elon Musk comes around and says, I want to buy your shares. And you made some profit. So it can happen. I wouldn't want to own just for those two reasons, but if you're owning it, that's pretty much the only reason you're owning it for. How do you see oil companies in 2022? Can they surge after earnings? Well, they're going to have great earnings because oil was up. Really, the only thing you're looking for here is if crude can continue to go higher, because they are basing themselves on crude, obviously. So we'll go ahead and look at the daily. Your resistance right now is our 50-day on the daily, right around 102.93. There's nothing really bearish about this chart. Again, you can see kind of like 95-ish seems to be support. So again, if you think that oil will continue to stay where it is and kind of just hold pat, you want to make sure that 90 is the level you're looking for a possible support on any kind of energy company. The problem is that it doesn't move exactly with crude oil. So again, I've seen those spreads, but again, because I've traded names like what was that? Not Marathon Oil. We'll just go with Marathon Oil. I forget the name. It was an energy company that didn't work out for me last week on calls with students. I have to look it up. Let me see. God, what was the name of that stupid thing? Let's see. Now I have to look. Oxy Petroleum. So Oxy Petroleum, again, you would think moves with oil. They're moving separate. So it does happen. But again, you're really pricing everything on energy, the sector, is if oil can hold its pricing. Again, 130 being the high, we're at 102, so 30% off the highs. Again, 90.06 seems to be that kind of level. If it breaks down below it, then we may have a little bit of a lower price running the summer. So again, summer season seems to be high demand. The U.S. government seems to be kind of counteracting that with relaxing some kind of environmental laws with certain kind of oil. And then the second thing, releasing more of the SRT, strategic release reserve, SR. So in terms of oil, so again, 90.06 would be a number I'm looking for. I wouldn't want to do anything here about buying more oil companies. I had an oil position on XOP. I sold that. And again, I think oil kind of just stalls for a little bit. I don't think there is more upside. Again, unless we're expecting disaster in Europe, I mean, nuclear weapons sort of thing, then oil will soar. But until then, no, I wouldn't want to make that bet, because the last thing you want to be is right, because if a nuclear weapon goes off somewhere, I don't know how you're going to collect your money. Again, hopefully that's not the case. That's terrible to even think of that. All right, guys, we'll go and leave it there. I will not be in tonight, but I will let you know here on the iPhone with the Apple report and the Amazon report. And we'll keep you guys up to date on Twitter as always. Keep it locked here on YouTube for any new videos. Twitter, of course. I want to give a big shout out to Nick. Thank you for doing that midweek review to keep our members up to date. Premium members and masterclass students, the midweek review was posted yesterday at 4 p.m. So again, we're always trying to do videos with you guys, kind of be as interactive as possible. Nick at G.A.R Capital on Instagram does a video every day at 4 p.m. He answers questions on navigating the markets with Nick. Feel free to follow him. He's also on Twitter as well. We tweet. I do Twitter. I do TikTok sometimes. Instagram is a social media team, and YouTube. So here we are. So again, any questions you may have, we're here to help as much as we can. Have a great rest of your day. We'll catch you guys on Friday for the morning note. Cheers.